That's been supported by this. Crude getting back up to 58.
Short position opened on British pound. So if you open, well done. You should open at 137,753.
Thanks. Oh, I have lots to say. We'll go there later.
Okay. Remain first, though.
Yes.
Good morning, Remain.
Good morning, John. Good morning, Lisa. Good morning, Tom. Taking a look at some of the big movers here in the pre-market. Cody, that's actually one of your biggest volume movers. Of course, big maker of perfumes and all types of beauty products. Reporting earnings. Earnings beat pretty much across the board, but pretty much investors weren't quite getting exactly what they expected out of the company. If you're looking for some action, though, in the market, a lot of it right now is actually going on in the cannabis sector. You had two big catalysts here. You had Tilray basically coming out saying they had struck this deal to distribute its medical cannabis products in the UK. And then Canopy Growth came out with its earnings report that were actually way better than what the street was looking for. So you're seeing a lot of those names rise. Canopy Growth attributing a lot of its growth right now to these Martha Stewart themed products, including a big...
Also, position open on Euro at 121.049. Just right here. Okay.
How he's been evangelizing this whole idea of putting Bitcoin onto corporate balance sheets. Of course, he had that big meeting with a bunch of firms last week, 1,400 firms, according to him. He said that we're on that call. Obviously, we know Tesla, Elon Musk, listened to Michael Saylor, calling him a genius for putting his balance sheet aligned with Bitcoin, at least to some extent or another. Flip up the board, a lot of activity also going on in the video game space. Big deal here, Electronic Arts buying Glue Mobile. This is the mobile gaming platform, probably best known for Deer Hunter and, of course, the Kim Kardashian Hollywood game, very popular there on everyone's cell phones. They're combining that up, and, of course, that's leading to a lot of speculation that there's going to be a lot of other deals out there. Zynga, another big mobile game company, higher here on the back of that speculation.
Romain, thanks so much. Greatly appreciate that this morning. Futures -3 on Bitcoin. Down it went, 48,000 down to a 45 level. We've rebounded nicely in the last hour, 46,300 on what has been a volatile stock this morning. This was a hugely popular interview a number of weeks ago. Mark McCormick revisits with TD Bank, their global head of FX strategy, because Mark McCormick has absolutely nailed dollar stability and indeed dollar strength. We just simply haven't seen that, and now we see it now way away from the weak dollar consensus. Mark, you reaffirm dollar strength. Is it a noodling dollar strength, or can it be big figure moves?
Yeah, it's a bit of a nuanced dollar strength. It depends on which currency you're looking at and how you think about global reflation. It's definitely dollar strength against the euro. Again, another push towards 120, below 120. But it also depends on some of these other European currencies. The way that I think the markets need to internalize this is part of a pivot from one regime to the other. And through that pivot and that transition creates more volatility. But on the other side of it, they're trying to figure out, is this dollar exceptionalism or is this just a squeeze in positioning? So right now, markets aren't really sure whether it's the positioning side or whether it's partly a U.S. exceptionalism story. But I'd say what this creates is a much more decorrelated dollar structure where you can look at relative value across countries. You can look at relative value within blocks. And you don't have to have a big dollar theme. And I think that's a big part of it, where it's the dollar outperforms European currencies, but you could still see a layer where commodity currencies perform well, and you could still think about carry trades on a reflation basis.
Well, I mean, the carry trades goes to the interest rate call. Are these dynamics interest rate based? Are they relative growth based? Or is it flows?
Well, it's definitely relative growth, and part of it is that you want to think about European currencies as funders. So the euro is kind of morphing itself into a key funding currency, largely because if you look at the relative equity flows, the Europeans are not attracting any equity flows, which I think goes back to the growth story that we talked about last month. The U.S. growth story is the thing that's surprising the most, and it's catching most people off guard. They're not sure whether this is positive or negative for emerging markets, largely because if you see U.S. rates rise off the U.S. growth story, then that disentangles the carry story a little bit. But it seems like we're moving into a bit of a sweet spot where, again, the euro becomes a funder. You look at LATAM currencies that offer pretty good carry, And you think about the prospects in the second half of the year where emerging markets can start to get inoculated and vaccinated in 2022, and you start to see the synchronization story start to work a little bit better. Which is, we still have some transition to get there, but the big part of this is the dollar is leading the growth story right now.
Okay, Mark, you're bringing up some really, really important questions. If the euro becomes the funding currency again, how does it correlate with risk appetite globally?
Yeah, it's a good question because the euro acts as a safe haven and it also acts as a pro-cyclical currency to some degree. I think what you want to think about is even though the global central bank is still expanding, the ECB's balance sheet is expanding faster than the Fed's. And again, if you look at relative monthly flows of equities into the Eurozone versus the US, you're actually seeing the broad balance of payment in Eurozone is deteriorating, which is regardless of the current account surplus, capital flows are leaving the Eurozone. So I think a big part of this is that if you're thinking about, reflation dynamics and the global economy improving in the second half of the year, the euro becomes the mechanism from which you buy from, largely because the ECB is more likely to do more rather than less. And the Fed is likely to be neutral rather than hawkish. So, what you're expecting is a bottoming in real rates in the U.S., potentially higher nominal rates off the back of this fiscal stimulus we're getting in the U.S. And the ECB allows this mechanism to be the anchor point, largely because their balance sheet is becoming, the quasi-driver of risk assets around the world.
Mark, potentially more people are interested in what you have to say now than ever before. I mean, they always have been interested. We always have been interested. But there was a great story on the Bloomberg terminal yesterday talking about how people who have 60-40 bond portfolios, stock and bonds, are taking a look more at currencies because bonds are so boring and they can't get anything, and they're investing more in trading currencies. Are you seeing that some of these bets that you're talking about, reflation and the dynamic between the central bank liquidity, is being more pronounced in currencies than ever before because people are turning to them rather than bonds that have been so manipulated by those central banks?
Yeah, it's a great point. There's definitely a lot of more discussions around macro. Last year, after, during the pandemic, there was not a lot of discussions on relative macro, which country is doing better than the other. So there are a ton of questions related to that concept. Like, one way to think about this is we track this economic dispersion index, which basically tells us how much variance there is across countries in G10 and emerging markets on a year-ahead basis. And that indicator is telling you that FX volatility should be 3 times the level of where it's at now. So I think people are getting interested largely because even if central banks are basically on the sidelines for the next year, year and a half, there's a lot of focus on countries, especially through the vaccination process and especially through the forward-looking nature of COVID. Some countries look better than others. Like even in Europe, Norway looks like the leader across Europe. So if you're thinking Europe, it's Norway, it's sterling, then it's euro. So even within that block, there are clear trades that are emerging here. So I think even you go back to Bitcoin as a form of digital currency where people are thinking, what are the alternatives that we can look at? Maybe are not entirely macro, but something we can diversify our portfolio that we used to just use gold for. So I think it's very clear that currencies are becoming quite interesting, and people are looking at it as a function of growth, as a function of equity flows, as a function of fair value, and whether or not they want to be hedged in those equity decisions that they make when they go across different countries.
Mark, just a final question from me on the Bitcoin point that you've just raised. Is it a competitor with just broad-based so-called fiat currencies, or is there a particular currency in mind that you think it's competing against right now just a little bit more?
I think it's competing in the space of gold. It's a diversification of a portfolio. It's definitely something that's much more focused on the speculative community. Obviously, central banks are thinking about it as well because if you look at what's happening in China, the PBOC is driving the movement towards digital currencies, but that's been pulled over from the private sector there. So this is a public-private initiative. But I would say it's in the realm of gold. It's not in the reserve diversification. It's euro, dollar, renminbi, and then Bitcoin. It's going to sit there somewhere on the fringe, but it's definitely something people are thinking about as an active way to think about macro risks. Our macro risk model basically shows Bitcoin, you can explain maybe 9% of it. So it's not something you want to think about broader global macro, but it is starting to come into these conversations where you want to relate it to a bunch of different assets that you cluster into different risk factors. So I would say, yeah.
Great conversation, Mark. Love having you on. Please come soon. Mark McCormick there of TD Bank. Tom, the euro point, I think, is going to be the really interesting one over the next several months. Just how you get your hands around what is going on in Europe right now and what it means for this currency.
Well, yeah. The absolute ambiguity over yen, we didn't get to it, but he's got a Swiss franc Japanese yen pair as his trade of the week. And John, I get the idea of the mystery of the euro, the whole vaccine overlay. I really wonder what yen will be doing, and I can't get a straight answer. I can't get much conviction out of people.
Not much conviction in the FX market at the moment, full stop, Tom. We came into the year just looking for a weaker dollar. That was the huge consensus trade, massive short, sitting on top of it. A challenge to that view quickly emerged in the first few weeks of the year, I think.
Well, yeah, it did. And, McCormick with a call of stability and even stronger dollar. There's a few others out there with that as well. I don't see yet a real strong reaffirmation of weak dollar. Maybe that waits for the weekend literature.
Weak dollar this morning, Lisa, against the whole of G10.
Yeah, well, this has to do with vaccination schedules. This also has to do with the idea of stimulus. And there's sort of this irony. Deeper deficits doesn't necessarily mean weaker currency. It means stronger recovery, and that's certainly
but does it
how
also
it's being
mean, are they selling out to buy Bitcoin? Seriously?
No, I think that's what Mark McCormick was saying. I'm not going to weigh in on that, but he was saying it's really competing with gold.
You almost did.
He almost just said.
You almost weighed in on it. Almost.
Well, I mean, that's what he was saying.
Almost.
He was saying it. I mean, your question was a good one, John.
You almost did too.
Anything else you wanted to tell us out? What's your projection?
No. Page 8. Page 8 of the outlook for G10 currencies.
Abramowitz's outlook.
Just a bit further, bit deeper into the outlook for 2021.
What's page 1?
Tom wants a price target. He wants a time horizon. Wants all of the above.
High yield spreads.
Futures down 4. We're negative 0.1%. Coming up in the next hour, a conversation with Dallas Fed President Robert Kaplan from New York City this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Gupta. It's a trial where the verdict is almost preordained. The unprecedented second impeachment trial of Donald Trump begins today in the Senate. He's almost certain to be acquitted. 67 votes are needed to convict. That would mean 17 Republicans crossing party lines to vote with the 50 Democrats. Proceedings begin today with a vote on whether the impeachment trial itself is constitutional. President Biden is set to ask 56 U.S. attorneys appointed by the Trump administration to resign. That's a standard process for a new administration. 2 of the federal prosecutors will be asked to stay on because they're working on politically sensitive cases. 1 is on an investigation into the president's son, Hunter. And the chief financial officer of Eli Lilly has resigned over allegations of inappropriate personal relationship. The drug maker says an independent investigation found what it called consensual, though inappropriate, communications between Josh Smiley and certain Lilly employees. They say Smiley's conduct was not related to any business matters. The fast-spreading coronavirus variant found in the UK has now found a foothold in Florida. That's prompted concerns about fans who flooded the streets of Tampa after Sunday's Super Bowl. Florida leads the US in confirmed cases of the variant known as B117 with 201 infections. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
I'm placing a stop on profit for euro. Price I'm looking to sell if change direction 121.029. Okay.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
For those of you who sold short British pound, you need to place a stop on profit right now. And you need to place stop on profit at 137.737. Okay? Good. You're not losing money. Yes, guys. Well done.
To the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
I originally thought Bitcoin would end the year at 50 or 60,000. Things are happening so much faster than I had predicted, right? The corporate adoption rate, the institutional adoption rate is accelerating beyond certainly what I had thought about. So now I think Bitcoin could end the year at $100,000.
I think everything right now in this market is happening quicker than many people anticipated. That was Mike Novogratz there, Galaxy Digital founder and CEO of Bitcoin from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Let's get you set up for the market day. Just quickly, a brief snapshot of this market. Your equity market is pulling back from all-time highs on the S&P 500, just a little bit, down 0.2% on the S&P 500. Dollar weakness today through all of G10. Euro dollar briefly kissing 121 or 120.99 right now, up about 0.4%. And in the bond market, the bid returns. The bid is back. Yields down a couple of basis points on a 10-year to 115.33. Can we get a snapshot of Bitcoin, Tom, just quickly?
Oh, please.
Rolling over just a little bit, just about positive on the day still. Bitcoin up about 1.5%, 45,000, and let's call it 400-ish after a 48K print a little bit earlier.
At Bloomberg Intelligence, Michael McClone has done the best work on Bitcoin. He's looked at the dynamics of it. He's looked at the modern market features of it. He's clearly been way out front in a vector moving higher from the lower left to the upper right, as a skeptic, Dennis Garber would say. Michael McClone joins us this morning with Bloomberg Intelligence. Michael, I want to go back to first principles in a Bloomberg article today on coal in Western China. There are things called miners. From Butch Cassidy. Who are those guys?
It's a global decentralized network following any place they can find cheap energy. From a strategist standpoint, the bottom line is there's 900 coins that can be mined a day. That's the max. Come 2024, it'll drop to 450. So I analyze it as the miners don't matter. It matters to them, but from a strategist predicting price, this is a set supply schedule. It's declining in terms of percentage. The only thing that matters is demand. The key thing is it's only 900 a day. Come to 2024, it drops to 450.
Page 1 of every economics textbook, including the ones Janet Yellen studied, is about scarcity. It is a manufactured, the critics would say, contrived scarcity. That always means nefarious elements come in to force the scarcity away. Who are those nefarious elements that could take the scarcity built into the price increase?
Well, there's 8,000 wannabe cryptocurrency Bitcoins out there. There's 8,000 altcoins. So they've tried. There's been many forks. Everyone has worked, but they have got nowhere near the robustness and adoption that Bitcoin has. So it's been through many deaths, and yet it keeps surviving. So that's the key thing about it. It's been killed many times. It keeps coming back. It's gained that global robustness. It's the go-to reserve now digital asset.
I will say, Tom, I just have this image of Butch Cassidy behind a computer plugging in algorithms in Venezuela,
Bolivia.
and it's really quite an image. I will say, Mike, there is also a question about just how much institutional adoption there is. This was raised, of course, by Tesla yesterday, coming out and saying that they will soon accept Bitcoin as a form of payment. Can you give us a sense of truly how widespread this idea is in major corporations, whether you actually expect to hear some announcements in the near future from other major companies about doing the same?
Well, initially it was a wave. Now it's a tsunami, and that's just getting started. Remember, we're talking about a U.S. corporation based in the reserve currency, the dollar. Just think of the rest of the world that doesn't have that reserve currency. They have maybe much greater incentive to allocate some of their treasuries to Bitcoin. So to me, this is just part of what's happening. It's being adopted on a global scale, and it's part of the reason I think, remember we went to 30,000, that held support? I think that's the reason 40,000 is going to hold support now. It's just going to continue. Something has to go wrong, which I knock myself around every day for. I don't know what it is right now, but it's in that unique phase where sometimes the technicals don't matter as much as what's the next support, should it hold, and just focus on your next resistance, which we all kind of know is around 50,000. It's a
Mike,
round number.
The more institutional buying we get, do you think it makes it more complex, more difficult for the government to step in and do something?
Oh, yes, they're going to continue to regulate. Remember, we just had Ethereum futures launched yesterday. We have Bitcoin futures. So Bitcoin's under the purview of a government. When you fill out your tax form.
But that's not government. That's the establishment of a market. John's talking about government regulation of a non-financial, non-coin. When does that happen?
Well, it might happen to something like it's happened to gold. But the key thing about Bitcoin is no one's project, no one's liability. Like Ripple XRP was someone's project and liability, and the government's cracked down on them. Here's the key thing about that. The government, the New York DA cracked down on Tether. Tether's the #1 stable coin. That was in April 2019. The market cap then was about $3 billion. So they've been under that purview since 2019. Now the market cap's around $29 billion. So do you think they've done anything illegal since? That's pure organic demand. What I see is the world wants a digital currencies and a digital dollar, and it's getting it, and the government's regulations getting in there.
My final question, how close do you think we are to a very well-known American company that is not run by Elon Musk, doing exactly what Elon Musk announced yesterday?
It's inevitable. I don't see what's going to stop it.
Wow. Mike McGlone, great to catch up, sir. Thank you. Joining us from Bloomberg Intelligence. Tom Keene, it's inevitable.
I'm trying to be real careful, John. Excuse me. On radio and TV, that can be difficult. It's open to huge debate, and what I take great pride in, folks, is we've really had an eclectic discussion here. Lots of people, John, against us. Lots of people for it at 45,423. Clearly the upper hand right now about those lifting Bitcoin to prosperity.
You know, the Bitcoin community, Tom, it's very diverse. I will say this. There are some really, really intelligent people, and then it's just nasty. You get this real sort of nasty element to it. If you say anything against Bitcoin, people just fill your inbox with some really nasty stuff, which I don't really understand. What is it about that element of it, that almost religious aspect to it, that if you push back a little bit, it just creates this anger in people?
You're going to get that in anything like this. It involves power and money. I mean, it's like gold or silver. I mean, William Jennings Bryan and the cross of gold. Same emotion.
Also, though, and John, Bitcoin grew out of a feeling that there was a goal to decentralize currency away from governments. There was sort of an independent streak that has given voice to a lot of individuals.
Yeah, but to John's question, when do they step in? John's question was the #1 question. I hate to say that, Lisa, it's killing me. When does the government step in?
Well, I think, but honestly, it makes it much more difficult for them to step in when you have the likes of, say, Apple, if the RBC analyst is correct, that they're going to take their Apple wallet and make it a cryptocurrency exchange.
Well, I think that undermines the anti-establishment argument in all of this. If you get a large US multinational company come out and do this to diversify their cash reserves, Lisa, that's not about anti-establishment. That's not their role, I would imagine. This is not Elon Musk. We're talking about pretty I was going to use the word normal. I'll use the word normal.
Go ahead.
Pretty normal CEOs, if they start doing this,
okay,
Lisa, that's a different argument. That's not an anti-establishment move.
Totally. And it raises a question of who the core user will be. But to raise another issue that you were talking about earlier in the break, we wouldn't even be having this conversation if there wasn't such a huge manipulation and printing of money and this idea of a shortage of assets. Where are you going to put your money anyway? Why not into some store that isn't as cumbersome to hold as gold?
John, what's the Chancellor of the Exchequer going to do? I mean, if we look at London as the center of world commerce, if they've got all sorts of geographic and transnational relationships, maybe much more than New York, how does London respond to this? How does the city respond?
I don't know.
Position closed on British pound. So all of you guys, if you followed my trades and placed an order just about 15 minutes ago, 20 minutes ago, well done. You made a profit. We closed at 137.737.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
levels of dangerous optimism building.
Right now, people are just trading big round numbers.
What we have, though, is a very big cushion that's been building in excess savings.
We're in danger of those markets overheating.
I think that next fiscal bill is going to be right around the corner.
A lot of the US stimulus actually isn't stimulus at all. It's an antidepressant.
You're going to have a more normal recovery with or without the stimulus.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television, across this nation. A day of focus on Washington and impeachment, but much more on that for our global Wall Street audience. It is a most interesting cross-asset bull market floating on liquidity. Let's get right to that discussion. Futures -7. But, John, everywhere you look, there's a nuance of interest.
There is, Tom, but I think the broader point for me this morning is just the argument that perhaps we do have an asset shortage in fixed income, and it's showing up in various places, Tom. And I think that's a conversation we've got to have just a little bit more, away from just the price. I know it makes a headline, record low yields. I know it gets attention, but it's the story behind the price, the mechanic behind the price, Tom, that I think needs a little bit more focus.
Well, you wonder where the demand comes on. I mean, the corporate issuance comes on. I'm thinking about oil demand, the dynamic we saw with Amrita saying Brent crude near $61 a barrel. She talks about up to 80, and the same dynamic in fixed income, which is about corporate issuance. John, we are seeing it, but you wonder if it comes in with a vengeance given the news.
Well, the Wall Street Journal had a piece that got a lot of attention in the last 24 hours, Tom, about the commercial paper market in Europe and these yields that were below the depot rate at the ECB. That was the headline. The story was the fact that savings across the United States and Europe are sky high.
Yeah.
Where's that money gone? That money's sitting in money market funds. Where does it go? Well, it goes into the commercial paper market, and commercial paper issuance has plunged, Tom.
Right.
So what's happened to the yield? That's lower as well. And why is all of this happening broadly in fixed income? The balance sheets are getting bigger and bigger and bigger at the time when savings are getting higher and higher and higher. There's a real issue here, Tom, a real argument between supply and demand as to why the yields are where they are. What I'm trying to understand is what that picture, that demand-supply dynamic looks like. Not now, but when the economy reopens, people re-engage with that economy. What happens to those money market funds? What happens to those savings?
In the heart of the matter, Lisa Abramowitz, is just real simple. What portion of cash is cash forever, or is cash that can go to equity markets? And the answer is we don't know.
Not just equity markets, cash to buy a plane flight somewhere and actually go on vacation. I mean, the idea here that so many people have parked money that they cannot spend in the service economy. I do want to raise an issue, though. John's raising a really important point. And there's another question. How do you measure risk in this type of environment? When you have this type of shortage of assets that's artificially imposed on a market because of the central bank activity, it's not like companies are not selling debt to meet the demand. There is reverse inquiry right now in the high yield debt market. We were just talking about the all-in yields, and there is controversy over how much this matters, being below 4% in the U.S. for the first time ever. And I'm looking right now at high yield bonds outstanding in the U.S., $1.6 trillion. That's up from a low of $1 trillion back at the nadir of the crisis.
You've got to explain this for people that don't follow that market. This is people calling up companies and saying, will you issue some debt, please?
Please, because we need to buy it.
That's where we're at.
That's where we're
Tom, that's where we're at in the credit market right now in the United States.
I am sorry, but it harkens back so much to 05 and 06, where institutions were begging for 10 basis points as well. I mean, I'm sorry. Some of the parallels here are really quite extraordinary. Let's do this. With a data check, -7, Dow futures -68. The VIX really doesn't give us much information, 21.73. John, give me one data point.
Bond market in Italy, last 24 hours, absolutely plunging that yield, Tom, off the back of Draghi's
Lower yield.
Around 50 basis points. Not sure where we are today on the screen, but 50 basis points yesterday.
Lisa, your data point, go.
Well, I was looking at junk bond yields, but really one of the most key data points is the gap between the key yield curves in the U.S. and Germany. And basically that gap is the widest since 2011 because you've got inflation expectations surging in the U.S. and not so much in Europe, Tom.
Brilliant. I see that in five-year.
Position closed on euro. Well done, guys. If you followed my trades, so you closed position at this level. Okay, that's it. Well done.
So I don't think that the U.S. dollar is about to surge because you've got a lot of stimulus coming already in the U.S. market and coming to the U.S. market. So this is very unlikely to be a very strong dollar environment. I think the way to read this is that the dollar had been very strong for years. That cycle has broken. There's a lot of stimulus coming forward, but the U.S. recovery and inflation expectations are rising. And so, maybe that dollar environment now starts to stabilize rather than continues to weaken considerably against, currencies like the euro.
So you don't buy the 2017 global synchronized growth weak dollar happy talk, Brian?
Well, I suspect you get there at some point. The challenge is that, the European economy looks challenged. Emerging markets are, for at least in emerging Asia and China, you're seeing improvements in economic activity. The U.S. economy looks like it's gathering some momentum. And so you start to think about some forms of synchronization as we move through this year, but currently the European markets look challenged.
So if you're buying the U.S., if you don't believe in a weakening dollar significantly in the near term, where do you look? What's the least overpriced corner right now?
Yeah, I don't think that we should say that we're not buying outside the United States. I think the emerging markets look particularly attractive. Those economies are recovering, and those valuations look more attractive. I mean, the United States, the reality is, valuations are not going to be a great timing tool here. So the reality is this is a cyclical recovery. That's the type of reversion to the mean you would expect to see. And so parts of the market that hadn't been loved are starting to perform well. Ultimately, you want to favor structural growth globally, but in the near term, it's your cyclicals and things that do better in a reopening economy as we progress towards that.
Well, Brian, John gets to the heart of the matter, which is the theme of a synchronized happy talk. I love that, John. It really captures sort of the, we are the world feeling that we got a while back. If that's the case, Brian, we have to make choices.